Thank you for joining us. During this short presentation, we will be talking about market developments throughout the coronavirus pandemic, the situation in relation to the JobKeeper wage subsidy, and also the Custodian Financial Group's investment approach going forward.
Following markets reaching their new highs in late February, both domestic and international markets saw some of the fastest and most severe declines in history. Since that point in time, we have seen a strong rally appear in markets, which has been caused by some fears around the virus dissipating, along with economies opening up as lockdowns ease. One of the biggest contributing factors to this sustained rally has been the unprecedented level of both monetary and fiscal policies by governments and central banks around the world. These responses have been far greater and quicker than the support offered during the global financial crisis in 2008 and 2009, because the stimulus has been targeted more towards individuals and small businesses in need of assistance as opposed to major corporate bailouts.
The federal government stimulus provided to date has centred largely around the JobKeeper wage subsidy. This subsidy was originally slated to end towards the end of September. However, after review and given the recent surge of cases in Victoria, this has now been announced that it would be extended for a further 6 months. However, future payments from October will be at a significantly reduced rate. Whilst markets have been buoyed by the recent announcement, we remain cautious, particularly given that there are a number of families who are dependent on this payment and the reduction moving forward. The light blue line on the chart on screen shows the effective unemployment rate if we include those individuals who are currently receiving the JobKeeper subsidy and working 0 hours. As you can see, even though this rate has dipped slightly over the last couple of months, it is well above the long-term unemployment rate, as well as the current official rate provided by the Reserve Bank of Australia, which excludes those individuals in receipt of the JobKeeper subsidy. This helps to highlight the vast number of people who will be squeezed following the reduction of JobKeeper, as well as those who may continue to face financial hardship over the years ahead.
For those clients where we were investing money, as you would be aware, we ceased the regular monthly implementation of our staged investment strategies back in January, following uncertainties about the impacts of coronavirus. We then implemented a couple of tactical purchases during March and again in May. Since the height of the uncertainty in March and the associated wild swings in equity markets, market volatility has reduced significantly over the past few months, following the easing of lockdowns and the injection of significant government stimulus. With greater clarity around the actions of governments and their desire to underpin the economy at almost any cost, we have greater confidence to recommence our staged implementation for our clients' investment strategies on the structured monthly basis we previously established these on. This approach enacts the benefits of dollar cost averaging, where we minimise the risk of market timing by investing money in stages at various points in time. As the chart indicates, the outcomes can vary month by month, however, ensure that a smoother average purchase price is achieved. In the example, the different purchase prices ranging from $10 per share to $30 per share result in a final average purchase price of a bit over $17 per share. This typifies the outcomes we are looking to achieve. To this avail, we recommenced our structured monthly investment strategy in July. However, given there are still significant uncertainties surrounding the coronavirus and potential impacts on economies, we are very aware there remains the prospect for headwinds ahead. In the event such headwinds occur outside of the time the regular monthly investment is scheduled for, and provide a scenario which we consider a perceived opportunity, we will look to take advantage of that opportunity at that time. This would be in addition to the regular monthly investment. As always, should you have any queries or concerns, please do not hesitate to contact your advisor, as we are more than happy to assist with any inquiry. Thank you.